Welcome to this afternoon's Admiral Markets Trading Spotlight webinar. Here we are on how to trade the 4-hour FX markets. It's a fascinating subject, one that's very close to my own heart. So we've got plenty to talk about. It'd be fascinating to hear what, if any, experience you have from trading 4-hour markets in FX markets. So if you have them, please just drop a note there in the chat box, or if you're watching this on demand later on YouTube, put in a little question or comment, and if you were liking the session, please just give us a like. And if you have any questions or thoughts about our future sessions, please, we're always pleased to hear your thoughts and opinions. So what are we going to talk about today? Well, not unsurprisingly, we're going to be talking about, what you need to be aware of when it comes to trading 4-hour market charts. What are the pros and cons of trading the 4-hour chart? Okay, there's no perfection when it comes to trading. It is literally about trying to find the trading style that suits your own personality, behaviors, and lifestyle. And we'll talk about how the 4-hour chart may help you with that. And we'll talk about some simple ideas for introduction to trading 4-hour charts. And if we have time, we'll have a little look at the latest 4-hour markets. For those who don't know me, my name is Paul. I've traded for many years, traded for funds, high net worth individuals, coached traders for about 8 to 10 years now. Primarily, I look to try and trade trends, okay, in longer term charts and reversals and mean reversion on shorter term trading markets. And of course, today, here at Admiral Markets, you can see they provide a wide range of instruments, provide a truly global offering. They're licensed and regulated across many regulatory environments, providing competitive spreads on the most popular trading products, and offering the opportunity to engage with markets using both MT4 and MT5. If you've got any questions, please get in touch with your account representative, and they'll be very happy to guide you. But as we said, ladies and gentlemen, here we are to talk about trading 4-hour FX markets. What we find is, when traders start out, is that they want to and try to sort of trade very short time frames in FX markets, maybe 1 hour, 15-minute, 5-minute, 1-minute charts. However, the sort of kind of brutal reality is for many traders is that when they start out, their kind of present skill set and lifestyle prevent them from doing it successfully on a long-term basis. So, what we're here to do today is talk about, well, this might be an opportunity to reevaluate how those traders are viewing and engaging markets, and in particular look at slightly longer term sort of swing and longer term trading charts, and in particular the 4-hour chart. So today I'm going to explain the pros and cons of trading 4-hour FX markets and how you could engage successfully with them. It's we are limited by time and scope, but what hopefully we'll do is that we'll provide traders who are new traders, give them an idea about what might be the pros and cons of actually looking to trade markets on the 4-hour time frame over the shorter time frames. So, as I said, it'd be fascinating to hear and know what, if any, experience you have yourself. Do you regularly trade 4-hour FX markets? Is it something you've looked at or not really been sure how to engage with? Or perhaps, you build the majority of your trading experience around it. It's great to hear that, okay, and to understand that, how you look to sort of view and engage with FX markets. So to begin with, I'll provide you with a personal disclosure, and namely that I love trading 4-hour charts. Okay, I really think they are a fantastic way to engage with markets, and here are the reasons why I particularly love trading 4-hour FX markets. Is that, and for me, what it means is that I'm less time at the screens. Okay, I'm not having to sit there all day every day. Okay, years ago I used to work for funds, and I got a bit fed up of being sat at my chair, sat at my screen from 6 in the morning till 6, 9, 10 o'clock at night. Trading the 4-hour markets means that I can actually condense my trading day, and actually just make it a little bit more effective, a little bit more efficient, and actually do things outside of trading with my time. It also helps me, I find it easier to choose quality over quantity. And what does that mean? Well, of course, when a new trader starts, that they're invariably taking lots of trade, because they want a quantity of trades for various reasons. They want to get experience under the belt, or maybe they've got a little bit of excitement, maybe they're even doing a little bit of over trading. Whereas, you know, when it's kind of trading the 4-hour charts, I personally find it easier to sort of wait and be patient and focus on choosing quality setups over just trading every single setup I see. I'm always wanting to choose quality over quantity, and trading the 4-hour markets actually helps me with that. And that links into time to prepare for a trade. You know, you get an opportunity to see good trades set up and build. Okay, they're not happening there, you know, minute by minute. Okay, where you're sort of forced sometimes into making kind of knee-jerk impulsive trades, which is what I see with very new traders who lack the skills and the patience and the experience to really truly deal at trading on things like 1 minute, 5 minute charts. Whereas on a 4-hour chart, it might take a few hours, it might take a couple of days, it might even take a couple of weeks for you to start to see a trade possibly look to build up, okay? And that provides you the time to actually prepare, okay? Actually prepare to sort of prepare your trades. Remember to plan your trade, and then it makes it easier for you to trade your plan. There's very often some very clean setups on the 4-hour markets, you know, which provide, as I say, good risk to reward. Okay, it's, you know, it's very possible for you to be able to find trades where you might risk, let's say, you know, somewhere like 40, 60, 80 pips, but have the opportunity to have a trade that might generate 200, 250, 300 pips. Okay, so in terms of being able to find good reward to risk trades, there are ample opportunities on the 4-hour FX markets. And it also allows you to do a little bit of set and forget trading, okay? As in, you can basically, you know, as I said, see the trade, find that trade, okay? Set your trade up and almost let that trade play itself out, okay? You know, you can have, once your entry's in, once your stop loss is in place, and perhaps your target or however you use a trailing stop, you're able to do that and almost, as I say, just set and forget your trading, which sounds kind of counterproductive, but for many traders, that is actually the best way for you to trade. Very often traders want to sort of, you know, they want to feel as if they're in control of the market. They want to feel as if they have to do more, okay? They want to interfere with their trades. And actually the best thing for a lot of traders is just to set and forget your trade. Just, you know, plan your trade your plan, manage your risk. I always say if you're doing those three things well, then, you know, you're trading well. So as I said, I love trading 4-hour charts, okay? And hopefully maybe today I'll give some of you, the newer traders, just a gentle introduction to, you know, what you could look at and how you can actually look to sort of operate effectively within those markets. So what do you need to be aware of? All right. Well, you know, one of the things about, as I said, trading 4-hour markets or 4-hour charts is, you know, you don't need to be there all day, every day. Right. You don't actually need to be sat on the edge of your seat, you know, for 12, 14, 16 hours a day. That's not necessary. But what you do need to know is you need to understand when those 4-hour candlesticks are closing and opening. And this is one of the good things, is that, you know, you can actually frame your day around the open and closes of those 4-hour candlesticks. So, you know, just looking at the Admiral Markets MT4, well, what you need to be aware of is when those candles close and open. And as we can see here, you know, remember the MT4, okay, for here, certainly for the UK, would be seen as the 12 o'clock candle, okay, 12 o'clock midnight would be the same as the sort of 10 o'clock London time, okay. So when we see the 0400 candle, okay, starting on the chart, that is actually the same as 0200 London time. The 8 a.m. candle is actually 6 o'clock London. 12 o'clock is 10 o'clock London. The 1600 4 o'clock London is 2 o'clock London time, and the 8 o'clock candle is actually 6 o'clock London time. So what I would say is, you know, I appreciate I'm doing this here from, you know, from the UK, but I appreciate, you know, wherever you are joining us from, you know, you might have a different time variation. So you just need to spend a little bit of time of just working out when those candles are actually closing and opening, because then you can actually start to set your timers. And I actually have timers here on my iPhone that just remind me, okay, just remind me that the, you know, the next 4-hour candle is coming up to close. And what that means is that I operate around windows for my 4-hour trading. So effectively, I'm looking for, you know, a kind of a 10 to 15 minute window either side of that candle closing. So So, we are here, it's a kind of it's 2 o'clock, all right, it's 2 o'clock London time. So, at around about sort of 1:45, 10 to 2, I will sit down and start to look at my charts to see how the major FX charts, how those 4-hour candles are looking and how they're going to look to close. And is there something that I need to be ready to either, ready to prepare to sort of set a new trade, or do I have to do something with managing the existing trades I have? Or do I actually get to see that my trade has completed, whether that be, a losing trade or a winning trade? What I'm looking for is, as I say, for about 10 minutes or so before the candle closes and for about 10 minutes or so afterwards, in terms of just very quickly, okay, being able to identify my particular trades, get my trades on, ensure that I've done my risk management correctly. And so, with a little bit of practice, a little bit of a routine and a nice little process, you're looking at sort of kind of 20-minute windows, 25-minute windows around the close and open of those 4-hour chart candlesticks. And so that makes it much, much easier to sort of manage. Certainly, if your trading lifestyle means that you've got maybe you've got a primary job, you might be a parent, okay, and have children with you as well all the time. So invariably, your time is very pressured, okay, and and actually you only have a few windows during the day you could trade. Well, actually, this could be the way that actually looks to help you, that effectively you just start to have a little routine and process. Maybe, as I said, you give yourself 20 to 30 minutes around each of those those kind of candle closes and opens, where you can actually just manage your trades and also set any new particular trades that set up. And with a bit of time and practice, that starts to get much faster. So that's it's important to know that and to see that, and it's a case of just being able to practice that. As David says, there's a difference between MT 4-hour candle and the UK time. Okay, it is. You're absolutely you're right. That's what we were just saying there, David. Is that the if you look at the kind of the 8 a.m. candle on the Admiral Markets MT4. That is actually 6 o'clock London time, okay, that will open. And so you just, wherever you might be based, whether you're based in the UK, Europe, or wherever you're watching us from here, you just need to just make aware, okay, of the difference between what the candle time is, and work that out where you are in the world. It doesn't actually take very long to work out. And once you realize that, well, then you can plan your day accordingly. So, when it comes to looking at, 4-hour candles, and in fact, actually, realistically, and you've probably heard me say this many, many times, is it doesn't really matter whether you're trading, the 1-minute chart, the 4-hour chart, or the monthly chart. Part of the important thing is about setting the right pre-trade routine, all right? That actually has a huge massive impact upon your long-term profitability, more so than being trying to find excellent clean setups. Having a nice simple routine that you're able to follow, well, that actually puts you in a good space, and it helps you, okay, manage your time around those 4-hour candle windows. So and you've heard me talk about this plenty of times, okay, and actually I go into this in more detail in other of the Trading Spotlight webinars. You'll also see that my colleagues Marcus and Jens, they also do some great stuff there. So by all means, check those previous webinars out on the Admiral Markets YouTube channel. But as usual, what we want to be doing is, you start by drawing in significant levels on your monthly, weekly, and daily charts, because you just want to be aware of where those significant levels are. As you don't want to be buying into resistance or selling into support. You just want to be aware of them. Where possible, you want to be able to identify whether that market is trending or whether it's range bound. And only then can you sort of drop down to the 4-hour chart. What you're looking for and hoping to see is waiting for a particular price action trigger at those particular levels, which we will talk about here. What we're looking for is, when you're entering a trade, be sure to wait for a break of the candle. And part of that with the 4-hour charts, as I said, is, I'm sat there about 10 minutes or so before the 4-hour candles will complete. But I'm not putting any trades on then. What we're looking at is, in fact, ensuring that I'm just waiting for that candle to complete. You know, sometimes with a bit of experience, I might be able to say, well, yeah, I think that's likely to close as a particular pattern. But even then, I still wait for that candle to close to complete. And then I'm looking for a lot of the times, I'm looking for a break of that candle as my entry, okay, to take me into the trade. As a rule of thumb, okay, for new traders, you know, your stop loss, and make sure you always use one, and it should be on the other side of the candle or the particular pattern. We talk very much about, managing risk, and as a general rule of thumb, you shouldn't have anything more than 1% risk on any single trade. If you don't fully understand that, okay, please by all means have a look in the Trading Spotlight webinar archive. You'll find there are quite a few good webinars by myself and Marcus and Jens, all about understanding risk management and how to do that in your own particular trading. Ideally, what we're looking for is, I talk quite a lot about using an asymmetric reward to risk ratio. Ideally, preferably, 2 to 1 and above. And as I said there a bit earlier, with a bit of experience, okay, a little bit of practice, the 4-hour chart offers opportunities for very good reward to risk trades. Okay, it is very possible to sort of be risking, sort of 40 or 60 or 80 pips in order to be able to, as I say, to make 180, 220, 250, 300 pips. Okay, that takes, admittedly, it would take a little bit of practice and a little bit of experience, but everybody has to do that journey. Okay, there's no necessarily a shortcut there, but with 4-hour moves, okay, with some very nice swings, that does offer you an opportunity to do that, especially within the FX markets. And as always, well, I'm very clean on, record, review, and repeat. Okay, you should record all of your trades. Okay, it's exceptionally important. You also want to make sure that you review them. It's very important to review. What can you learn from that trade? Okay, and that doesn't matter whether you've been trading for 2 days, 2 weeks, 2 months, or 2 decades. Okay, the really great traders that I know and have worked with over the years, they always record the trades, they always review the trades, and then they look to repeat the good trades. All right. Remember what I said earlier is about it's looking for quality of trades more so than quantity. And once you keep a good record and you're reviewing them, you will start to identify which particular setups, which particular sort of instruments really talk to you, resonate you, where you might have a particular edge that you can effectively leverage. And now you're just looking to repeat those trades. And what will happen is you'll actually find that you will take less trades because you'll start to focus on the particular setups that work for you. Okay. And I share here, sort of, 6 to 8 different kind of trade ideas and setups, and what you do is with practice, you'll probably find that maybe 1 or 2 of them particularly work for you. Okay, they particularly talk to you, they resonate you, they fit in with your beliefs. Okay, your understanding of markets, your particular risk profile, and once you keeping good records allows you to get to that point much faster. I always say that I've worked with very good traders over the years. Okay, I've worked alongside them, trading with them in institutions. I've coached them, I've mentored them. Every single good trader, okay, every single good trader that I know keeps good records of the trades and reviews those trades and looks to repeat the good trades. Okay, keep it just it's simple as that in terms of a good business practice. So, if we're going to look at trading 4-hour charts, well, what tools can we use? Are there already tools that we've talked about that might actually give you a little bit of help, a little bit of particular insight? Well, what we talk about is, a lot of the price action ideas that I've discussed previously, they still work and are very, very effective on those 4-hour charts. Okay, I'm not a big fan of reinventing the wheel. Okay, I don't think there's anything necessary in terms of trying to be over fancy. Okay, I quite often see traders who particularly, they try to come up with far too sort of complex, okay, difficult trading systems. And in fact, what happens is they just, it just becomes too difficult, okay, for them to actually trade consistency. what you'll find is simplicity is key. All right, simplicity is key. It's not necessarily about finding this superstar ideal trading setup that will effectively, mitigate and end any losses, because that doesn't happen. It's about having a simple idea, a simple setup that you can happily, consistently, repeatedly execute trade after trade, day after day, week after week, month after month, quarter after quarter, year after year. Okay, and the joy and the beauty is in the consistency of that. Okay, and letting those good trades play out where you actually generally do have a good asymmetric reward to risk ratio. But in particular, some of the price action ideas we've discussed previously on other trading spotlight sessions, they work particularly well. So things like trend line breaks and trend line bounces. Okay, if you particularly like to draw in trend lines, they will still find, and you'll still find them working on 4-hour charts, and we'll maybe have a little look at one or two of them in the on the live charts. Things like breaks of support or resistance, they themselves, okay, will still work very, very well once you're able to identify. Remember, I was talking about drawing in those significant levels from their higher time frames and being able to see how price reacts there. Okay, the continuation and reversal patterns, okay, which are very simple, very standard, they still work very, very well on 4-hour charts. Okay, they still are very, very effective. Things like moving average bounces, that's something I particularly like to do. I like to sort of just try and trade. Personally, I like to try and trade pullbacks. Okay, I like to see pullbacks in trends. Okay, I like to buy the dip and sell the rally. Okay, that's what I like to see and do. Using some of the price action candlesticks, which we've done, specific sessions on, okay, over the sort of previous trading spotlight webinars. Okay, so things like what we've got here. Let's bring up the old drawing tools here just to help people. Element things like just rejection candles, okay, and pin bars. Elements like sort of engulfing candles, all right, outside bars, all right. What we have here, we covered here sort of star formations. We did that I think only a month or two ago on evening star and morning stars, and also particular favorites of mine, key reversal candles here. Okay, key reversal candles. So remember, if you don't remember what a key reversal is, there are videos in the webinar archive, so please feel free to go and peruse them. But just a quick reminder, okay, a key reversal, again, a bearish key reversal, price pushes to a new high, but actually it closes beneath the low of the previous candle. So there's a complete psychological turnaround. And for a bullish key reversal, okay, price would have been going down, but actually it during that session, okay, it moves to new lows, but it reverses completely and it actually closes higher than the high of the previous candle. So once again, the bulls have stepped in and they have taken control. Okay, and when you see particular setups like that on 4-hour charts, I start to get very happy. Okay, especially when it becomes that confluence of events. Okay, when there's a confluence of events coming together, that's when Paul gets happy on his 4-hour trading. So what we have here is, also, as I said, buying pullbacks and selling rallies and trends. That's where we like to work. And also news announcements. And what do I actually mean about that is, what I'm talking about there is, I don't mean trading the news itself, okay? I'm not a big fan of trading the news, but I am a big fan of seeing how the market responds to that news. That does appeal to me. Okay, that is something I am interested in. How does the market respond to that? And so there might be big news out, and actually an hour or two later, the 4-hour candle completes, which actually encompasses the price action in and around that particular news announcement. And that might be something that gives you an indication of the ability to have a look at, see where the next swing trade is for the next few hours, days, maybe even the odd week or two. So it's just I just took a couple of screenshots of a couple of ideas just to be able to give people a sort of a thought about, well, how can you see, what can you actually work with? And let's have some drawing tools on here. This is just a EURUSD 4-hour chart. We'll look at it live in the moment. When I look at a chart like this very, very quickly, I see elements like that is an evening star formation. We can then see that, actually you can see price here, okay, rejection candle, followed by an engulfing candle, which is, a rejection that bounces off the 50-period moving average. There's a 3-bar reversal there, which also has effectively, is a key reversal there. And then that's finished by this candle pattern here. Okay, this is another evening star formation before price drops down, okay, to what was actually sort of the end of a range of a particular a consolidation range where price actually put in a double bottom that was completed with effectively a couple of rejection candles before putting in here we go, sort of a wedge, a little symmetrical triangle pattern before price blew all the way up to hit the other side of the range. And when it hit the other side of the range, once again, it put in another evening star formation, which then price actually drifted down until it was completed by. This is an engulfing, a bullish engulfing candle. Okay, it's not a key reversal because the close is not higher than the previous high, but it's still, it's still a bullish sentiment. And as you can see, price has broken through and gone through there. So that was just, a 4-hour chart there, okay, that just picked up. And as I said, once with a bit of practice, okay, and there is no getting around that, okay. Deliberate practice is going to have to be part of your routine. But remember, this is a 4-hour chart, okay. If if you've been trading 5-minute charts, in many ways the price action will look just very similar, okay. It's fractal, okay. It's the same patterns, okay, just repeated on lots of different time frames. And your ability to practice and watch this and do this and read this, will help you enormously in your own trading endeavors. And this was a euro dollar, okay, 4-hour chart, and hopefully you can see this. This is trends setting up here, okay. You can see, actually probably can see where I got into this trend where effectively price was above the 20, is above the 50, above the 200 period moving average, and price had a pullback. It had it was basically making higher highs, okay, higher lows, just standard price structure, working its way up above the moving average, and it came back down here. And this is it's a 3-bar reversal, which is also a key reversal. Okay, price pushed to new lows before it came up and closed above the high of the previous candle, and you can see for yourself that it actually effectively it ran very nicely. I actually got out of the trade here because what we saw there was a key reversal there, and price drifted down, and actually what it did is it put in a counter trend line there. Okay, it was like a flag pattern before price continued to break and move its way up. And hopefully what you can see here, I'm just going to clear some of this, is that as I said, remember I was talking about actually price respecting the 20 period moving average. You can see there, as price is still going up, it's pulling away from it, and price itself came back down again here and bounced off it and moved up. So as I said, it's an opportunity to sort of take a trend, and when you have the opportunity to join an existing trend, well, that's it's a great way for you to trade. Instead, it doesn't take as much time minutes because you can effectively center your life, okay, around those 4-hour windows. Now, admittedly, wherever you might be, what kind of version of MetaTrader you'd be using, the candle might be a little bit different because of your particular timings. What I say to that is you have to trade what you see. Okay, you have to trade what you see. You trade the chart that is in front of you. Okay, and that's the simplest advice that I can give you. Some people would say, well, Paul, I'd prefer it if my candles closed at a different hour than this, and that's possible, but what you have to recommend or recognize is that you have to trade what you see in front of you, and that's where you work from. That's where your starting point is from in your endeavors. And this was, as I said, what I tried to do is just pick just charts up off the MetaTrader, so you could actually have a look and an idea, okay, of what we were looking at. And we can see here that the 20, the 50, the 200, and we actually were in particular downtrends, okay, that were a bit scruffy, pulling back until we had a bearish key reversal there, and an engulfing candle before we moved down. And then actually what we happened to here was, this was into a double bottom here, and price rallied for the rest of the week. Remember, when we see these, okay, on the 4-hour charts, we see these delineators, okay, these kind of vertical lines, that's representing a week. of trading. Okay, that's representing a week of trading, and having reached that bottom, we can see that price, entered into a, is putting in a trend for the week before actually, we had a key reversal there, and price dropped down to these recent levels before it came back up. And actually, what we saw was, swings there. We had, 3 weeks, nearly 4 weeks of price just swinging between particular levels. Up here, this is another bearish key reversal before price dropped its way down. Then we had a bullish key reversal here before price swung its way up. So, it's, as I said, it's a case of being able to, it allows you just to effectively, watch what's going on in those charts. And that means you're not having to sit there constantly glued to your screens. It gives you the opportunity to sort of just take a little bit of a step back. Okay, you're not being forced to make, quick, impulsive decisions. You get a chance to read that market, to analyze it, to identify, is that market in a trend or is it consolidating? In which case, you can start to look at, see how does price react at the particular edges of that range, because that is where it starts to get interesting. Certainly for me, myself. And this is euro yen, and we'll look at this in a moment, I think, if we have time. But what we have here is effectively, price is just making higher highs, higher lows. We get a very deep pullback here, okay, which, to be fair, would frighten a lot of people out. But once price comes back up above the 20, the 50, the 200, well, that trend continues to do. And you can see once again that 20 period moving average is acting as real strong dynamic support. And then, what happens is, and you've heard me say this plenty of times, that when price starts to race away like that, when price almost goes vertical, parabolic, invariably, it exhausts itself. And we can see that it did exhaust itself here into a scruffy double top, which was finished with a key reverse before price drifted back down to the 50. And now, what I'm looking at here, okay, what we're looking at is, well, the price is still responding, okay, to that 50 period moving average, all right? And that's what you're looking, you find that those kind of on the swinger trades, the moving averages, okay, can help enormously just to confirm if the trend still has enough energy behind it, will still carry you forward. And as I said, with just a little bit of practice of looking at these charts, and because we're focusing on FX charts, there are, I tend to focus on 29 charts, okay, the dollar index and 28 other of the major crosses. But of course, with FX markets, we actually have, we have probably about 60 to 100 FX charts. Okay, once you start to include the real exotics, okay, the real emerging market currencies, you can go hunting everywhere. My own personal view is focus on, sort of one of the big pairs. Okay, maybe the dollar, right? Okay, which is the big daddy when it comes to trading FX, but also maybe euro or sterling. Okay, depending upon where you are based. I appreciate some of our visitors will be in the Pacific, so they may particularly look to focus on perhaps Japanese pairs or Australian dollar or Kiwi dollar pairs. That would give them a starting point to focus on, and then as their experience grows, then you can start to expand in terms of what you're looking to achieve. So in conclusion, ladies and gentlemen, trading 4-hour FX markets allows private traders to trade around their exciting lifestyles, okay? Or even existing lifestyles. Maybe it is exciting to trade 4-hour FX markets because it requires small time windows around the close and open of the 4-hour candles. And the truth of the matter is, you're not even going to be there for all of them, okay? There are 4-hour candles that close during your night, okay? During your evening, wherever you in the world might find yourself. But there will still be an 8 o'clock, roughly an 8 o'clock, a 12 o'clock, a 4 o'clock, and an 8 o'clock one. So there's this kind of 4 there that allow you to basically to watch, even that you might not be able to capture maybe the ones during the day because of let's say you're working a full-time role, but it would allow you to effectively just have a couple of engagements with the market, right, on a much easier, less stressful sort of way of operating that would allow you to engage with markets without having to feel that you need to sit there constantly. So as it says there, you may only need to check a few times a day. And as I say, use the monthly, the weekly, and the daily charts to do your analysis. and then come down to the 4-hour charts to execute your trade plan. As I said, those 4-hour charts, that they provide the opportunity for very good risk to reward trade setups. And what you'll find is a wide range of trading setups work well on the 4-hour chart. Okay, it is a very popular, popular trading style. Okay, I personally have a client and a friend, okay, who trades, for institutions. Okay, he trades up to 200 contracts and FX, and all of his trading is done on 4-hour charts because it means it's less stressful for him. It means he can spend time in his day going to the gym or going out or looking after himself, doing other work, okay, spending time away from the screen, so he's completely fresh every time he comes to look at it, and that's the way he works as an institutional hedge fund trader. Okay, so there are people who work and do very, very well simply focusing on trading 4-hour FX markets. So we've got a couple of minutes, just a minute or two left. So maybe we'll look at. I appreciate we started a little late today because of some technical issues. So I appreciate you sticking with us. If you want more support from us here at Admiral Markets, then as always, I suggest joining the Trading Spotlight community. We're always in there. My colleagues Marcus and Jens post some great stuff in there day to day. I'm going to be in there for the rest of the afternoon. So if you've got any questions about 4-hour charts, come in, just drop us a question. I'll happily sort of give you some help and insight. And you can do that by joining us at tradersyard.com/group/312. There should hopefully be my assistant will have just provided you a little bit of a link there. So please feel free to come and join us. We always enjoy any of the interaction that we see from traders in there. And don't forget to join us on Wednesday when my colleague Marcus is going to be talking about how to create a successful trading plan based on fundamental analysis. And he's going to cover why your business plan is so important, what are the useful fundamentals, and how to help you create a proper strategy. So that'll be on Wednesday, 26th of August, 2 p.m. London time. Please check your inbox for the webinar link. As always, there's lots of analysis and education on the admiralmarkets.com website. And if you want to contact us, you can do so. Email global@admiralmarkets.com. You can watch this, and all of the other Trading Spotlight webinar series on the youtube.com/Admiral Markets and at facebook.com/Admiral Markets Global. I hope you found that useful. And as I said, it's just about providing an introduction, an element of insight into traders, new traders who could have a look and a view at how they could maybe move from, trading, intraday trading, okay, which may not be suitable for them because of their present lifestyle and commitments, and have a look at, the opportunities that are provided with the 4-hour chart. And just for 2 minutes, just to very, very quickly finish up, what we'll do is we'll just quickly have a quick look at a chart, and I'll just show you how I'm set up there. So if you just bear with us a moment, we'll switch across. So what I have here is just very quickly, is you can see here, I have a profile here. This is a euro profile, and I have profiles for all of the major FX pairs, okay? And you can see here I have just it set up. So I just have 8 charts here. This is the euro dollar, the euro against the sterling, the euro against the Aussie, the euro against the Canadian dollar, the euro against the Japanese yen, the euro against the Swiss franc, the euro against the New Zealand dollar, and the DAX, okay, which is the sort of major index, okay, for Europe, the German DAX. So very quickly, I can see that it's there on the 4-hour chart, and I can very quickly just see an update and follow what is actually been going on. So if we have a look at, let's say, euro against New Zealand dollar, well, hopefully you can see that has been in quite a nice and clear trend. I keep telling people, good trends leap off the chart at you, okay, and when they do, don't try and fight them, okay? It's pointless, all right? When those trends do exist, and if we look at this, remember what I said here is that the vertical separators, okay? If you don't know where if you don't know how to put them in, if you look at properties, okay, common, you should here show period separators, okay? Every one of that is showing it is a week. Okay, there's a week there. So this trend has, it started, and it's been running for 1, 2, 3, 4. We're into the 4.5 weeks, okay, of this trend. Now, interestingly, what I'm seeing here is, so we saw it pulls away a little bit of a double top before it rolls over, and then it has one last big push up to break that high, and we've fallen back down again. And what I'm just looking at here, just look at how this price here, okay, where the 20 and the 50 is. So now I'm going to be looking this week to see, well, you know, is this trend about to roll over? Okay, could that do that? I'm just watching that, just keeping an eye on that very, very clearly. But hopefully you can see that, you know, here, you know, price came back to the moving averages, the 50-period moving average, all right, and it provided opportunities to basically to just get on board, okay, to join and trade with that trend, you know, and you're risking, as I said, 40, 50, 60 pips for the opportunity to, you know, 150, 200, 250 pips, which gives the opportunity to ride a particularly good trend. So sorry, we've run out of a little bit of time there. I do apologize. That was just some technical issues, but I hope you found that useful. As I said, my friend and colleague Marcus will be here Wednesday. As always, I wish the best of success in your own trading, ladies and gentlemen. And I look forward to speaking to you next Monday on my next installment for the Trading Spotlight webinar series. Many thanks, everybody, and have a great day.